I trade with the 50 range chart and the 25-minute range chart. I take my primary direction off of the 50 range chart. Okay. I then use the 25 range chart for entries if I miss an entry on the 50 range chart. And I'll give you an example of that in a second. So what I have on my screen here is I've also got three moving averages. They're all exponential moving averages. We've got the 20 exponential, the 60, and the 100. Now, they're there to enforce discipline, really, more than anything else. So the moving averages will tell me that the trend is in motion. Even though we can see it with our own eyes, the moving averages basically gives us a permission to trade. So it stops us from jumping in too early and trying to basically chase every move that exists in the market. Okay, so for us to have permission to trade, we need the moving averages to be in the right order. Now, the right order is the 20 above the 60 and the 60 above the 100 permission to look for short opportunities. So basically, it takes away one option for us straight away. Okay, because as we know as traders, everything's very easy in hindsight. But when you're in the heat of battle and you're at the hard right edge of the screen, things can become a little bit distorted, and our decision making isn't as great as it is when you're looking at things with hindsight. So what we're trying to do with our trading is we're always trying to make things as simple as possible. We don't want too many variables there because, you know, that's where analysis paralysis kicks in. Okay, you've got too many things that you're looking for and you end up never taking a trade, or you take a trade and then another signal tells you to go the opposite way, and you basically chop yourself about and you lose yourself some money, which isn't the best thing to do. Okay, so the moving averages gives us permission to trade. Once we've got permission to trade, then we're looking for the standard sort of price action setups, and they're pullbacks within a trend. Okay, now I say this to my subscribers all the time at Traders Corner. If you can be patient in this business, then in the long term you can make money. If you're impatient and you're ill-disciplined and you're always chasing everything, then you're going to have a harder time with things, okay? So what I mean by this is you always have to wait for the very best setups. And the very best setups for me, for the most part, where I'm going to put in, you know, the biggest positions, are setups like this here. So if we take a look at this, I'm going to take a look at the Australian yen here. Okay, so first of all, for this first trade here, we'll start from the bottom of the chart. Okay. What I love support and resistance. Okay, I love support and resistance in trend lines. If you give me those two tools, I'll trade all day long. It's not a problem. So what we have here with this first opportunity is the market has broken up. Okay, the moving averages have lined up. It's crossed up here, which is fantastic. So we now have permission to take the trade. We don't trade based on that cross. We just have permission to start looking for opportunities. Now, first opportunity, the market rallies off up here and it pulls back. But if we cast our eyes to the left of the screen, we can see that the market has pulled back to a previous level of resistance, which has now become support. And it's actually ridiculous the amount of times this happens on our charts, guys. If you can just wait for these setups here, then in the long run, you should really come out on top. So essentially, we've got the market's broken up from here, it's pulled back. At this point in time, when the market's pulled back to this level, we can then draw in our trend line, as we have here, and we can look to take a break of that trend line. Now, generally speaking, I'm not one of these people that waits for candle closes or anything like that. If I get a break of a couple of pips, maybe 3, 4, 5 pips, I'm happy to take the trade. Now, I know we don't have the extra confirmation there, but for me, from my personal perspective, if I'm waiting for candles to close, I feel like I'm leaving too much on the table. That's not to say that you guys need to do the same thing. It's just the way that I trade, the way that it suits my personality. And that's something that is individual to every person. You have to find the way that trade that suits you. If you prefer the extra confirmation, then by all means, wait for the candle close. But for me, I'm happy just to take a trend line break. So we get the break of the trend line, and obviously we put our stop below. So if we took a break here, we'd be in there at about 82.18. You'd have your stop below at 81.80. So you've got about a 40 pip stop. And generally speaking, I like to get at least 1-to-1 on the table. If not, preferably I go for 2 or 3-to-1, but it really depends on the price action. So you're always looking for a positive risk reward ratio. Okay. Then if we move up the screen again, we'll get to the analysis of the current charts in a second. I'm just demonstrating to you what the type of setups that we look for. Okay. So if we take a look again, the price is pulled back. Okay. We don't quite get a pullback to this previous level of resistance here, but it's in and around that level. Okay. You can then put in your trend line like so, and you can trade the break of your trend line. This opportunity here would have given you a little bit more heat than the previous one, but eventually it does go up to at least the candle highs. And this is something that I also like to have with my trading. I like to be able to at least have 1-to-1 on the table by the time I get to the previous swing high. Okay, because I don't want the markets to have to do anything extraordinary like break out to new highs for me to be able to lock in some profit. And I like to lock in some profit at about 1-to-1, move my stop a little bit closer, break even or something like that. If I don't have that opportunity with a particular trade, then I'd probably take a smaller position. It's not to say I'd pass up on the position altogether, but I'd take a smaller position because I like to have something on the table by the time we're getting to the highs. And as we can see here, we get to the highs, the market threatens to get above it and then pulls back again. But let's take a look to see where this is actually pulled back to. As you can see, it's pulled back to this previous level of resistance, which has now become support. Sure enough, the market plays around with that level and then rallies off from it again. Okay, and if we move the charts up, you can see these all over the chart. Now, the one thing I need to warn you about with the Forex market, with the FX market, it is, I mean, you guys should know, but there's no central exchange. You're not going to get something like, if you're trading stocks or something like that, where you have an absolute price from your broker. Different brokers will quote different prices. And for that reason, I'm not so interested in levels to be pit perfect. As long as it's in and around a region and it's respecting a region, I have no problem taking that trade whatsoever. Okay, now with this particular opportunity here, you would have got into this opportunity and you would have been whipped out. But the secret with technical trading is you need to be ready to take the second opportunity. Just because you've been taken out of one trade, as you would have been here, so it would have taken you into some profit, you would have been taken out, and it would have hit your stop loss. There's nothing we can do about that as traders. We just need to learn to embrace our losses and understand that it doesn't matter about the next trade. The very next trade has no bearing on our overall performance as traders. It's about a larger sample size of trades, okay? So you get whipped out of that trade, that's not a problem. You just extend your trend line and you look for the second break. We get the second break up here. You place your stop below, and again, this is one of the opportunities where I possibly wouldn't have been looking for, I wouldn't have put on a full size position. Reason being is that I only have a little bit before I'm getting to the previous high. So I wouldn't want to risk as much. It's not as clear cut an opportunity as some of these were. But in any case, you take the trend line break and you ride it for your profit.